while the visibility is coming up positively for demand for execution of the projects and implementation of the projects and all that, do you think, sir, the kind of execution or the ramp up of the asset would be in line with what you have been initially thinking about it?
Yeah, again, you're right that there have been some delays, various geopolitical issues, various supply chain issues, various other things that have created that kind of a situation. But when you compare our, let's say, capex positioning versus some of our peers, I think we've still done a fairly good job in terms of getting us there. Right? So, ramp up of the capex obviously is a slower process, but we are fairly confident that some of the capexes that we have done, some of them in the specialty chemical space, have already started to provide some positive, and that should be a trend that can continue.
Sure, sir. Yeah. Thank you, sir. Wish you all the best.
Thank you.
Thank you. And the next question is from the line of Jason from IDBI Capital. Please go ahead, sir.
Sir, thank you for taking my question. So, sir, just wanted to understand, of course, you have a healthy capex momentum and multitude of projects going upstream. Just wanted to know, I mean, of course, with the whole environment, the prices for intermediates being driven down, I'm sure the IRRs for these projects must have been affected. But so just wanted to know in that perspective, how are you managing to, safeguard these IRRs? So one would be, your 85% of your products on agrochemicals are patented, so you'll have a certain price protection. As you mentioned, client negotiations are there. Or will you probably revise downwards the capex? Just wanted to know what are the tools you have to safeguard these IRRs on multitude of projects which you are executing.
So, again, Jason, when we look at it from an IRR perspective, let's say when you conceptualize a project and then when you execute it, IRRs come through over the next 5 to 10 years in that sense. Right? When we are looking at the project, we are also looking at various other multipurpose plants, what we can do in those projects. What are the more value-added products that we can continue to produce? What are the more complex products that we can continue to do? And therefore, ensure that the IRRs kind of remain in good shape. Now, when you start a project versus when you have gone through a 10-year phase of the project, only then will you come to know of the exact IRRs that have panned out. To be very frank about it, what we've seen over a period of time is that we've typically achieved the IRRs that we've started with or in fact bettered them over a period of time. I think that as a trend can continue for us.
Okay, sure, sir. Sure. And so just wanted to understand, I mean, last call you did allude to a lot of significant competition in terms of refrigerant gases, particularly from the Chinese players. Just wanted to know in that perspective only, which subsets of our chemical, we have a wide range, AIs are there, you have fluorochemicals, refrigerants. Which subset are you seeing the maximum Chinese competition? And
maximum is HFC.
Hello? Maximum is HFC. And so if you could just speak about, of course, it's very tough to match the Chinese on cost competitiveness. So of course, you will have to move higher up the value chain.
I don't agree with that, Jason. I think cost competitiveness is fairly in good shape with us as well. We are not worried on the cost competitiveness side. But what the Chinese end up doing in some situations is to be able to push the price down even below variable cost, which is the problematic thing that happens. So it's a situation that Chinese create sometimes in the market, given the fact that they have large capacities and large inventories that have been built up, and they just want to liquidate the inventory. So that's how it ends up happening. Sorry, you were saying something, I kind of interjected.
Yeah, sir. Thanks for that bit as well. I mean, just wanted to understand, you've spoken about, of course, basically venturing higher up the complexity value chain, customized products for customers, which is an effective moat, which will form an effective moat for your business. So just wanted to know from you, if you could throw some more color on this, like how exactly are you doing it? I understand it's not very easy to encapsulate it, but just wanted to know from you and some more color on this, that how you're doing it.
Yeah, again, I think at the end of the day, our R&D, our CTG group, in terms of what is the kind of products that we are looking at, what's the complexity, what's the position that we are creating. I think at the end of the day, it starts and kind of ends also with our CTG group to be able to do some work in terms of either the product, or complexity of the product, environment load of the product, manufacturing the product in a more efficient manner. I think those are the key elements that pan out. Again, like you said, it is very difficult to be able to give you a single pinpoint or a single, let's say, position on this one. It's a combination of various factors. Jason?
Sure. Thanks for that. Those answers. Thank you.
Thank you.
Thank you. And the next question is from the line of Rohan Gupta from Nuvama. Please go ahead, sir.
Yeah, hi, sir. Good afternoon. Sir, a couple of questions from my side. Sir, first is on our 3 new products which we have launched in agrochemicals.
You are not audible. Can you just pick up the speaker and pick up the handset and talk, please?
Just a second. Sir, am I audible now?
Much better. Thank you.
Okay. Sir, I was saying that in agrochemicals, we have launched 3 new products, and I think 2 more you are saying to be launched in the current quarter. Just wanted to understand that these are the products where we are still seeing some Chinese competition or low demand or inventory destocking taking place in those products as well, and the pickup will be slower than what anticipated, or they are the new molecules and we'll see no such pressure?
So typically, I would say that these are the new ones, and therefore, as of now, not a significant position from the Chinese on those ones.
Okay. So, sir, is it true, is it so that the revenue pickup in Q4, where you seems to be very confident about growth in Spectrum, will be mainly driven by these new launches?
No, I think I answered that question in the beginning also, Rohan. Somebody had asked. I think it is a combination of various factors. We have said in the past as well that what we've seen is deferment of orders. Some of those deferred orders are starting to play out. So that's the way we are looking at it. Some of the flagship products also, we are seeing some traction coming back on them. There are certain geopolitical situations that have got created largely in the Red Sea, where customers are now starting to ensure that the deliveries are faster and more quantities being ordered. So all of those factors playing out, plus obviously the newer products that have got capitalized are also starting to show up in the revenues. So it's a combination.
Sir, if I see your business in a specialty chemical in line with the industry, probably that many of the industry players have seen a significant drop in revenues in 9 months. However, though for you also it has been weak, but probably much better than the industry. Is it because mainly the products which we have are the specialty or with the innovators in nature, and that's what has protected us in terms of the revenue growth or less decline in revenues?
I didn't catch the last part. You are saying that we are better than the industry, but what's the question here?
Yeah, so I'm saying that we have done better than the industry. It is mainly driven by the product basket, because you also said in one of the comment that you are also witnessing competition from China, and customers also sometimes move to Chinese supplies. So what has helped us in terms of doing better than the industry in the current scenario?
It's a large product portfolio, Rohan. We are today almost at 35-40 products that we supply. Our total dedicated plants today are probably in the range of about 17-18. Right? So to that extent, I think it's a wide product basket that we have. Compare it to 2016-17. Right? The number of products is much larger. So while some of the products do get affected, I think there is a good hedge that has got created over a period of time.
And sir, you have mentioned in your presentation that you see the demand outlook is getting better, and inventory rationalization, though it's still going on, is improving. So when, sir, in last 3 to 4 months, the scenario which was significantly impacted from China, and I think that most of the Indian players could not anticipate that this problem coming in month of April, May, and the inventory destocking suddenly took place in June, July, August, September. So do we see that can be further possibility of that scenario getting repeated, because the Chinese suppliers are still remaining aggressive, the capacities are still remaining there. So how do we, how confident we are that the situation have improved and we may not witness what we have seen in the current year?
Again, Rohan, I can only talk about SRF, then talk about other competitive positions that are being created. We are also looking at the fact that in the specialty chemical space, the order book is seemingly very strong. So, I can only tell you that much. From a fluorochemical perspective, and ref gases, prices seem to have started to edge up. And that's what it is, Rohan. Why were we doing better than our competition? I think it could be a product profiling issue, it could be a product basket issue, it could be a complexity issue, and various others. So very difficult to pinpoint it from a peer's perspective.
Sir, that's it from my side. Thank you. Yes, sir. Thank you so much.
Thank you. And the next question is from the line of Nitesh Dhoot from Dolat Capital. Please go ahead.
Hi, sir. Thank you. Thank you for this opportunity. So my first question is on the domestic fluorochemicals business. So just wanted to check if there has been a growth there year on year, and what kind of volume growth would you have seen there? And your outlook, on the domestic fluorochemicals, the refrigerants business, if you could just give some color.
You're talking about the fluorochemicals or ref gas business?
Yes.
So, again, we will have to look at it from 2 or 3 perspectives. Typically, when we see this, Q1 for each financial year from a domestic perspective is the strongest quarter. Again, given where the positions are from a heat perspective in the local Indian market. So that's what we typically end up seeing. But from a medium-term perspective, what we believe is that the Indian market is still a growing market. We will see more traction from domestic producers, be it RAC, be it mobile air conditioning. So that should pan out. And overall, I think as the shift happens in terms of the requirement of refrigeration in India, I think the market is set to grow only. So that's the medium-term outlook from a ref gas market perspective. Also, when you look at it, there are no major players in the HFC space from our perspective when you compare the industry players around it. So I think we've built a significant moat in the business. We've built a significant share in the market. We will continue to expand into more in the domestic market. The export market also, both from a Middle East, Southeast Asia, to a certain extent US, will continue to grow for us going forward as well. It may be a situation where some of the gases may be degrowing. There could be other gases that could end up growing. So that's how we would look at it from a medium-term perspective, Nitesh.
Sure. Thank you. So my next question is on the effective tax rate. If we see 9-month ETR was around 27%. So what is it going to be for the full year and for FY25? If you could just give some indication.
So, Nitesh, the best is when you look at it to look at standalone. Right? When you look at standalone, we are now in the new tax regime. We will probably be in the range of 25.5 to 25.8% as an overall ETR from a standalone perspective. Each of the other entities have a different position. Thailand has certain incentives. Hungary has certain other kinds of incentives. There are certain positions in South Africa. So instead of looking at it on a consolidated basis, the best is to look at it on a standalone basis, where India will be at roughly in that 25.5 to 25.8 range of the ETR.
Right, sir. So just one last thing, if I may squeeze in. So on the contribution of pharma in the current spec chem revenues, and where do you see this moving in the next couple of years?
So as of now, it's low, to be very frank about it. Right? There is a focus around it. We believe in Q4 also there will be some positive around it. But in the medium term, we should get to significant numbers on pharma. Again, agro has been a very significant positive for us, and I think that's an area we are continuing to expand. The numbers don't look very encouraging as of now, given on a Q-on-Q basis. But overall, I think there is positive traction on the pharma side as well, and that should play out in the medium term, Nitesh.
Right. So that's helpful. So thank you so much.
Thank you. And the next question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead, sir.
Thank you. Good afternoon, I have two questions. One on specialty and one on refrigerant.
Sorry, Sanjesh, very muddled voice. Can you be a bit closer or something else? I don't know.
Can you hear me now?
No, very badly.
Hello?
Yeah, go on, Sanjesh. If you speak only, then will I be able to hear.
Okay. Sorry. So I got two questions. One on the specialty and one on refrigerant gas. On the specialty, the 1,800 of capex.
Maybe you will have to reconnect. We are unable to hear you.
Okay. Hello? You can hear me now?
Very, very feebly, Sanjesh. Is it only me or operator? Is everyone not able to hear Sanjesh?
Hello, Sanjesh sir. Can you reconnect again in the queue?
Yeah.
Okay, sir. So the next question is from the line of Rohit Sinha from Sunidhi Securities. Please go ahead, sir.
Yeah, thank you for taking my question, sir. And good to hear positive outlook for your specialty chemical. Just one question on packaging side. First of all, on this aluminum foil business. Initially, I mean, the capex size was somewhere 450 crore, which ended up around 536 crore. So initially the asset turn was 1.7 to 2 times what we have indicated. So currently also we are maintaining that asset turn, or is there will be some changes?
Let me first give you the reason for the increase in the capex cost. Now, during the period of implementation, you know that the commodity prices have gone through the roof. One of the reasons for the capex cost being higher was a higher commodity price position that was playing out, Rohit. Second, I think and the more important thing is that what we have done in terms of when we were doing the project is getting better specs on the aluminum foil. How much of a thinner gauge aluminum foil can you produce will give you a better value add. So we kind of reconfigured our thought process from the initial one to be able to produce maximum thinner gauge aluminum foil. So those are the two key reasons for the capex being higher. In terms of the multiplier, I think it still remains there or thereabouts. But again, as aluminum foil ramps up, it will probably take 6 to 12 months. Hopefully, as we also continue to move into thinner gauges, the value that we will create here will be much better. So that's how we would look at it, Rohit.
Okay, sir. And lastly, on just on BOPET and BOPP side, just to hear what kind of situation we are seeing and how this margin is going to be shaped up going forward, as we are now below 5% EBIT margin. So still, I know still oversupply situation is there, but how we are seeing this from your side?
On BOPET, again, I think it's a story which will probably take another 12 months, maybe slightly more than that, to kind of normalize. We are still seeing growth in demand from a domestic market perspective, but the oversupply situation kind of continues. Again, you know that this is also a business that has been the most impacted and the most cyclical business in that sense. So BOPET will continue probably like that for the period that I talked about. BOPP is doing better. There are no new supplies that we hear around it, but the Chinese will always keep putting up new lines. There will be some pressure on that as well. But again, Rohit, I think the bigger point here is that when you compare this to, let's say, some of our peers, I think our value-added product profile, our customer traction, our relationships have actually helped us even still with the kind of environment that we are in to continue to do well. We are going into, let's say, more value-added products. You heard the announcement on the capacitor-grade film that came in. So I think we are in fairly good shape on that one as well. It is the market cycle that is playing out today, and we are still doing pretty much all right. So that's how we would look at it, Rohit.
Okay, sir. And what kind of utilization level we are operating at in this?
Roughly speaking, about 90%, 91% overall.
Okay. That's it from my side, sir. Thank you and best of luck.
Thank you. And the next question is from the line of Tarang from Old Bridge Asset Management. Please go ahead.
Hi, good evening, sir. Just a simple question. So typically for your spec chem business specifically, how does the working capital, what are your working capital days between debtors and finished goods stock?
So give me just a minute. I don't have that number readily available. But generally speaking, Tarangji, what we look at is that typically we want to manage our working capital in a good shape. Roughly speaking, net working capital basis will be at about 20-25%.
Okay. And have you seen an expansion here versus say 2 years back?
No, I think we've actually been able to manage it lower.
Oh, it's come off, is it?
We've been able to manage it lower is what I said.
Okay. That's helpful. Thank you, sir. So no changes in terms of your working capital, right? It remains at 20-25%.
Just give me 1 second. I'll give you a good range on it. I may have spoken off my head. Just give me 1 sec. So the NCA to net sales as of now are roughly in the range of about 30%. But we typically try and manage it at specialty chemicals business only. And let's say last year we were somewhere in the range of about 20%, 24%. So that's how it is. But again, it's a business that is a batch-based business. So to that extent, I do believe we will come back to more normalized levels by the end of Q4.
And all the expansion that you are seeing from say 25% to 30%, because of it being a batch-based business, it's all the raw material or WIP led.
Largely inventory, raw material and FG led.
Okay. Thank you, sir.
Thank you. And the next question is from the line of Dhruv Muchal from HDFC AMC. Please go ahead, sir.
Yes, sir. Thank you so much. Sir, the question was on the US ref gas market for us.
Sorry, please repeat. I am unable to hear you.
Yes, sir. The US ref gas market for us, the cuts I think have come in. So probably a bit early, but how do you see it for us? The US ref gas market, the cuts, 2024 cuts have come in, I think. So how do you see the market for us, positive, negative in terms of volumes and probably pricing? And also related to this was I think there was some capacity which had come up in Middle East, big capacity, but was probably not playing as per the rules. So any development in terms of, events there, if you can share. Thanks.
So, from a US market perspective, it is not cuts that have come in for us. It is the overall production that has to get cut from a US market perspective. Again, because production will get cut, we believe there may be some negative around it in terms of the overall, let's say, sales that we can make around in the US market. But again, I think it's a mix that will pan out. Because of the fact that the cuts are not based on a gas-by-gas basis, they are largely based on a GWP equivalence basis. What we will end up seeing on that side also is that some of the gases in the US might expand, while some may kind of fizzle out. So that's how the medium term will play out, Dhruv, on that side. What was your second question? I kind of missed it.
The capacity in Middle East probably not playing as per the rules, and there could be some implications on that capacity. Any development which is what
there is a lot of chat about that Middle East capacity of about 30,000-40,000 tons that is coming through. But what we've kind of we are also kind of figuring it out as of now is what's the basis of where they are getting the fluorspar from. If they are getting an HF, where are they getting that HF from? It's a bit of a quandary as of now. Nobody really knows about that capacity or whether it is producing. Right there, you also may be aware that there are certain circumvention, let's say, positions that the US market is also talking about for some of the imports that are happening from these jurisdictions that you are talking about in the US.
Okay. Sure, sir. Thank you so much and all the best. Thanks.
Thank you, Dhruv.
Thank you. And the next question is from the line of Dhavan Shah from Curate Advisors. Please go ahead.
Yeah. Sir, my question is on the spec chem side. So you mentioned that for the first 9 months, there is a degrowth of roughly 10-11% in terms of the revenue, and you are hopeful that this fiscal will end up with maybe stable or largely lower negative side of the growth, and there is some deferment of the revenues also. So what is the quantum of the deferment of the revenue, and what is the key reason for that? That is
Well, it is impossible to be able to give you the details in that granularity. That's the base trend that we are talking about. We will continue with the trend only, rather than giving you numbers around what's the deferment, what's the position that is playing out. Impossible to do that.
Okay. And how is the overall demand, do you see, in terms of the spec chem? Is it bottom out? How is the overall sign in terms of the demand environment? Can you share some thoughts on that?
Well, I think it was well answered during the call. We are very positive in terms of what we are seeing for Q4. And when we look at it from an overall FY25 perspective, I think we will probably be able to provide some guidance around it, probably in May or when we do our May call. So that's how it is.
Okay, sir. Thank you.
Thank you. I now hand the conference over to management team for closing comments.
Thank you, everyone. I hope we've been able to answer some of your questions. I hope that each one of you continues to remain safe and healthy. If you have any further questions, we would be happy to be of assistance. We hope to have your valuable support on a continued basis as we move ahead. On behalf of the management, I once again thank you for taking the time to join us on the call. Thank you. Bye-bye.
On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.